Let's go to CommSec. Tom Piotrowski's live for a look at the markets today. How are we opening up today, Tom?
Pete, we're going to take a decent step lower this morning. The futures are telling us we'll be down by around 0.8%.
Wow.
And that is getting away with things reasonably well, considering the declines that we've seen for Northern Hemisphere stocks, which have been coloured by an announcement in relation to the US sovereign debt rating, according to the Fitch credit rating agency. So they downgraded US sovereign debt from AAA to AA+. First time we've seen something like that since 2011. So that has unsettled markets quite considerably. So what we've seen is longer-term US interest rates sell off by a pretty decent margin, and that has led to particular weakness where technology stocks are concerned, because they're particularly sensitive to rising rates. So the Nasdaq down 2.25%, the S&P 500 down 1.5%, and the Dow Jones down by about 1%. So the European experience was a little more acute in that respect, some decent declines there. We had the Stock 600 index, that's the broader measure of European stock performance, down by about 1.4%. Same for the DAX. The French market down 1.3%, and in London the FTSE was down by around 1.4%. So European government bonds tended to fall in yield, so higher in price, reflecting the opposite experience of their US counterparts. So what this does, Pete, perversely, with the US credit rating being downgraded, you see investors move to safe havens like the US dollar, which doesn't quite make sense. But what that does is put downward pressure on commodity prices. So we've seen oil fall away by about 2%, gold down by about 0.5%. So it's going to be a pretty tough day for local investors today.